question here. Let's just do a quick recap of this to make sure this one shouldn't be too hard. The first one, is that a lease or not? No. That's clear, right? It's a service. The key thing about the first one is you probably have a right of substitution, correct? So that's unlikely to be a lease because of substitution. If you had dedicated freight cars for a particular client that were done a specific way, that would be different. So the first one is not a lease. The second one, Hanoi shipping. Yeah. Actually, A and B are the same. I don't know what happened here. Yeah. When they wrote the question here, those are supposed to be the same. So that should be A. Okay. So A, sorry, the numbers got mixed up there when they formatted. So A, because there's a pool of cars, is basically not going to be a lease. B, Addicts Petroleum. Correct. B depends, or Addicts Petroleum depends. If it's just one customer, like Saudi Arabia with Aramco, then we have a lease. If the pipe is used by multiple customers, like in the case of Western Africa, then it's a service. So it depends. How about the third one, the boat? It's a lease because in this example here, those restrictions are protective, right? Yes. They're not substantive. So they're protective. So you can't go near Somalia, or you can't go near hazardous areas, you can't carry hazardous waste. Those restrictions are protective.
But if they have their own assets and they have the same restrictions for their own self, then this may not be, then this may be a lease contract.
No, I said it is a lease, I said. Correct.
But if these protective rights are not the no-go area for this company, then in that case, will that still be a lease?
Well, if generally in this industry, you have to apply common sense. If generally in this industry people don't go near Somalia, or they don't go, they don't carry hazardous waste, or if you want to carry hazardous waste, they charge you a higher price because they have to get more expensive insurance, then that would be considered to be protective. So usually there's a different price point as well. If you want to carry hazardous waste, there's a higher price point because they have to get more expensive insurance. That's protective.
Can we say this, that if these restrictions were substantive, the lessee would not have entered into this contract?
Probably.
Yes. And if he has entered into the contract with these restrictions, then these restrictions are not substantial for him.
Yeah, but that's not the analysis from the standard. I mean, that could be your argument, but the analysis from the standard, because you could enter a contract that has substantive restrictions, and it's a service contract. You may choose to do that. So, I guess the difficulty here is, if nobody allows their vessels to go to a certain region, and it's more of a standard protectionary clause, it's protective. I guess where it gets difficult is if some allow their vehicles to go there and some do not. Then it becomes more gray area, right? So if it's a gray area, what you would probably find is if you want the vessel to go to, say, near Somalia, to those dangerous areas, you probably find that those vendors have a higher price point. Correct? And they probably use that higher price point to cover insurance and to adjust for that risk. Now, this is not in the standard, but you'd probably be saying, well, if there's a different price point for that flexibility, that you could probably infer that's kind of like a protective right as well. This is where IFRS gets gray, right? IFRS doesn't really talk about what if it's two price points, and one price point allows us to do more stuff because it pays for more expensive insurance. It doesn't talk about that. But to me, I would feel that that's still kind of a protective right. You want that, pay extra for that risk. That would be my interpretation. That's what you were talking about, right? So you don't find in IFRS everything spelled out. See, just speak.
In the part A, you said that it's not a lease, it's a service contract, right?
Yes.
So, if you compare it to the example you gave earlier, in which you said that a person contracts with an airline company for a specific seat, and he says that I'm going to use the seat indefinitely. So, isn't that also a service contract? Why did we analyze it from the identified asset point of view?
Well, step one, okay, I think in part A, the identified asset is a freight car. Correct? And I think in part A, it's clear there is no identified asset for a specific customers because I have a lot of cars and I grab them as I need them. So in my analysis of part A, there is an identified asset, a freight car, but there is not an identified asset for this contract. When I was talking about the airline, my angle was different. Is an individual seat an identified asset? And I would say, hold on. An individual seat is probably not an identified asset in the context of IFRS 16 because it needs to be a bit bigger than that. A seat doesn't fly by itself. So to me, the identified asset is probably an airplane.
But why are you questioning the identified asset? Why aren't you saying that it's a service contract in the airline example?
Because what I was trying to point out there is I've had other scenarios where you have a group of equipment. In other words, how low of a level can the identified asset be? So what I'm trying to point out, an identified asset needs to be able to work autonomously to some degree. And therefore, my point is the engine and the toilets and the luggage compartment, there's a lot of common stuff. So my point is, for there to be an identified asset, the common group assets can't be substantive. That was my point there. Like in real estate, when you rent an office, the view is the elevator and the outside toilets are not substantive. We can share those and still have a lease. But with an airplane, I would say it's different. I was trying to point out a different item.
You can also say that it's a service contract in that case.
Yeah, therefore it's a service contract.
Therefore,
Because there is no identified asset. Or the identified asset, it's all the seats, it's the whole airplane, and of course we share it.
so is it a residual category like service? It's a service contract because it's not a...
Correct. Correct. So if it's not a lease, it is a service contract. Exactly. So if it's not a lease, it's a service contract. Exactly. So it's either a lease or a service. And I guess right now, what's the difference between an operating lease and a service? What's the difference right now?
Identified.
No, under last year, under IS 17, what's the difference? So what's the difference between an operating lease under IS 17 and a service contract? Nothing really, right? I mean, from a practical point of view, what's the difference? It's off balance sheet. There's some disclosure issues. You disclose the lease payments for 5 years. You don't disclose service contracts for 5 years. There's very minor differences. So the point I'm trying to make, under the old standard, if it's a service contract or an operating lease, the auditors didn't really care. But if it's a finance lease, that's a different issue. So now there's much more rigorous examination. Is it a service or is it a lease? That's the emphasis of your IFRS 16 analysis. So, A, pool of cars, identified asset, but not just for this contract. Therefore, it's not a lease, it's a service. B, the pipe depends how many customers, right? Yes. Multiple customers or one customer. Multiple customers, service. One customer, lease. Yingling, the boat, there's one boat. You'd want to judge these here on the concept of, are they protective rights? Okay? And for protective rights, the issue there we're looking at is what is the business norm? What is the common sense approach, right? So generally, if everyone is going to use an asset a particular way, and those are in the contract and it doesn't hinder it from its normal usage, then you would say it's a lease. If they hinder it from its normal usage, then you would say it's a service. So then the question is, if some contracts allow you to do it that way and some don't, what do? Apply common sense, right? Or you ask the Big Four for their interpretation, right? But I think if you apply common sense there, you'll find there might be different price points when you enter in the asset. You enter the asset probably at that price point for a particular use. So probably it wasn't going to hinder its usage to you. So I would still say it's a lease. So this is the area where it applies a bit more judgment. The last, D. The fiber capacity. Yeah, the thing here, it's equivalent, right? So the moment it's equivalent, it's not a dedicated asset. Therefore, it's not an identified asset, it's a service. No. It would not be a lease because there is not an identified asset, because there's multiple strands of fiber and they can choose what strand they're going to use for you. So for it to be a lease, the strand needs to only be for you. The moment it's for multiple providers, it's not a lease. Clear? How about Hilton Hotels? Well,
we will need to assess whether the supplier will have economic benefits in substituting the asset or not. Something like this.
well, okay. For it to be a lease, the customer operates or designs the asset, right? Okay. So in this example here, the hotel goes to a vendor and they tell the vendor, listen, we need to have Wi-Fi for our hotel. And what the hotel would normally do is agree in the SLA, the service level agreement, the speed. Correct? It's the vendor's problem to make it work. So if it's the vendor's problem to make it work, who operates the asset? The vendor. So when you have contracts where you only buy the output and it's the vendor's responsibility to run it, then it's not a lease. Now the exception there is if the client designs it or operates it. Now probably with the internet company, you don't tell the internet company how to design the room of the internet equipment. You probably give them a room, say put your stuff in here and make it work. You might tell them where to put some of the wires in the hotel to go between the floors, but that's more minor. You don't design the major equipment. So therefore, the internet room would clearly not be a lease. It would be a service. Does that make sense?
And also about the replaceability of the servers can make the asset not identified.
Correct. Well, this is a right of substitution. Now, just because they can replace the servers, that needs more analysis, right? Because I said if they can replace them because they're broken or because there's a malfunction, that doesn't mean it's not an identified asset. So just because the supplier can replace it, it's when can they replace it or how it's done. So generally it's not, this one here, if you analyze it, it's probably not in the supplier's interest. It's not economically viable to change the equipment, right? So you could probably say there is an identified asset because it's not economically viable to change the server, and the only reason why they're going to change it is because it's broken.
So that comes when they're having no repair and maintenance.
Correct. Because the parameters are, is there an identified asset here? Question 1. Well, yes. It depends. You have to analyze the fact. But there is probably an identified asset because once you install that equipment, it's not economically viable to keep moving it around. It's going to stay there. And the only time you're going to move it if it breaks or it malfunctions. So do we have an identified asset? Yes. But who controls the identified asset? The vendor. So the reason why this is not a lease is not because there is not an identified asset. It's because of the control aspect. Make sense? Now if I changed it, let's say move and pick went to the vendor and said, we have our requirements. We want a Cisco router. They give them a list of all the requirements. So if Move and Pick went to the vendor and said, here are our detailed requirements for corporate, and you have to have this exact equipment in this room, would it be a lease? Yes, because because the hotel, they don't operate it, but they designed it. So most of the time, the hotel isn't going to design that room. So it's design or operate. Clear? Now, this is one of my previous exam questions. Look at question 2 for a second. Question 2.